Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, January 6th, 2016. We'll take a look at the spiders today. Markets collapsing again. We had really a formation which is called a flush, pause, flush. All right, and in other words, what really was going on here is Monday we got the big drop, Tuesday was a pause day, Wednesday we continued with a big drop. Now this is important because we're going to close below this former pivot low. So right off the bat, that's a negative bias short term for the market. However, there's not much downside to go in the markets, all right? So I do think there's a little bit more downside, but your target is pretty apparent here. See this gap fill right here? And that coincides with these little pivot areas, pivot low, pivot highs right here. You can actually just put a trend line right through those, which matches to this gap fill. That is your target downside. So again, even though the markets look scary right now, I'm actually starting to look for buying opportunities on key stocks. And there's a bunch of key stocks that I'm liking, CMG being one of them, and a bunch of other ones out there. Some oil and gas stocks I'm actually really harping on and starting to accumulate as well, and I'll tell you why in a second. But again, just look at it in terms of this. So here was your former level. You hit this on Monday, you pierced it, and then bounced and closed above. Tuesday was a pause day, a little bit of a bounce day. Wednesday, here's today. We flushed, we closed below it. That triggers continuation, or should trigger continuation to gap fill, at which point you should see a 3 to 5 day bounce in the markets, maybe a little bit more, but that's generally what you'd expect. Once we get a good bounce off of that, then I think you have another flush down the line to about the 187, 188 double bottom down here. Okay, so again, short term, look for a little bit more weakness. You got another 3 points of downside, I would say, on the spiders, which is about 30 points on the S&P. Once you hit that, look for a bounce. The bounce will probably be about 50 points on the S&P. So, I mean, very tradable, very, very tradable swing trading levels here, by the way, on stocks and on individual, the SPY, on ETFs and so forth. All right, and then once you get that 50-plus point bounce, I actually think that bounce could even be a little bit more. I think you probably go back to about 204. See this gap fill right here? That's my target. So you hit 190. 195, you bounce back to 204-ish, give or take a little bit. And think about that. That's actually about a 90-point bounce in the S&P 500. So that's a pretty big bounce. Once you hit that, then look for a continuation rollover and sell where you come down, take out this line, and you head towards double bottom. Some stocks that I'm following, guys. Needless to say, I'm a big bull on CMG right here. CMG overdone dramatically into my master level of support right here. It's already started to bounce off the 425 level. Look at the low today, 423. My buy range was anything below 430 down to about 425. And again, you can see it's already bouncing. Even with the market at the lows of the day right now or just off the lows, you're starting to bounce up beautifully. So this should see a nice bounce. I'm looking for a bounce back above 500 on CMG, a snapback above 500 on CMG. There are also other stocks that I'm following very closely, like take a look at Chesapeake. All right, Chesapeake, I actually think is showing some great relative strength. And if you look at this chart, right, look at the move up on Chesapeake, right, and then today we've seen oil collapse, right. If you look at the oil chart, take a look at this oil chart, USO. All right, look at this. The last 3 days, reversal, down big today. All right, by the way, big volume today, which could dictate a potential bottom in oil. But the point is this. Notice how oil's making a new low. So here was your previous pivot low. Here's where you currently sit. If you compare that to a Chesapeake, look at how strong this is. I mean, this is rallied up, and it's just having a small pullback today. But it's still, I mean, you're still talking about being 20+% off the lows on Chesapeake while oil is hitting new lows. So as an analyst, you have to look at that and say, all right, well, what's going on here? There's definitely relative strength in Chesapeake. So that tells us that when oil does bounce, Chesapeake should be a leader to the upside. And again, upside target minimally the 50 MA, but I actually think you'll probably go to this gap fill up here, which is around the $6 level. So I have a target of around $6 on CHK. There are other stocks like this too. Take a look at KMI. Now, KMI is not quite as strong as Chesapeake, but notice here you got this little downsloping trend line, which will give us the heads up when it breaks out. But you have higher lows so far. But also notice how, again, oil is at new lows dramatically, right? It's really broken below the recent lows on the USO on spot crude. But look at KMI. It's holding up. Now, it doesn't mean it will hold up forever. I mean, we have to watch it and kind of analyze it day to day. But right now, I look at that and I say, that's an interesting disparity. That's something that needs to be paid attention to and potentially is a long trade. So sure enough, again, guys, I like the KMIs. You know, any oil stock that's doing decently well compared to oil, I think is a definite heads-up play. The one I would stay away from here, I mean, you can see SDRL. down to $3 here. Look at this drop, and it's just continued to go lower. It's basically been weaker than crude and continues with the drop recently to make new lows. So that would be one where you would say, okay, I don't like the price action on that. It's not showing relative strength. It's basically in line with oil, maybe even worse than oil. So you'd want to stay away from the SDRLs, in my opinion, just to be safe. But again, the other ones, the other one's very attractive. SWN, another good example. Down a huge amount today, down 16% on SWN. But look at the rally. And this is only a minor pullback to the 20 MA. Now, I'd wait to see what happens tomorrow with this one because that's a big down day today. But the point is, again, look at the low here, look at the rally, and then look at crude oil, how low it is and how it's making new lows. But SWN is not making new 52-week lows. To me, that's a signal of potential upside on these specific names in the coming week or weeks. So these are the things you want to pay attention to, folks. This is what it's all about. I've been picking up new positions in the research center today. I've added 3 positions. My business partner added 1 that's already rocking and rolling. This is where it's at, guys. Join us at InTheMoneyStocks.com. Take the 7-day free trial. If you want these trade alerts that I'm putting out, time-stamped with my exact entry, join the research center. Take the 7-day free trial at InTheMoneyStocks.com.